All right, ladies and gentlemen, I hope you had a wonderful day. We started off the week by giving back all of the gains from Friday, only to bounce up and do nothing. But the main point of the day today was all about the rate cuts, the bond yields, and what people think is going to happen next. So we did get a little bit of data. We'll talk about it. There was a market reaction. There was a lot of individual news. NVIDIA got upgraded. Then SMCI was like, I'm going to go up 15% too. And there were earnings in the morning, but throughout the whole day, you could categorize this as what happened last night with Powell, what happened from the Fed speakers, and how people feel about the rate cuts. So I'm going to go over all of that. We did have some big changes today, even different from Friday and a lot more different than what we saw last week. But the main theme of this week is all about the Fed speakers. We got more earnings tomorrow. I got plays. I got the keys. We're going to go over all of that. So what I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/The Stock Market. We will see you there in the morning. Run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it
baby. But right off the bat, as far as what happened today, Powell's comments from last night stung. He reiterated that there would likely be no more rate hikes in March. People were trying to word it as if he said rate cuts at the beginning half of the year. He did stand by the dot plot and how most of the Fed members do still see 3 rate cuts, but it was a lot different than the 7 that is still already priced in, and the market had a reaction to that. So even though the equities, they sold off and then they bounced up, it was also a mix of the strong ISM data. ISM services came in hotter, prices paid came in hotter, as well as employment. And right when that came out, we did watch the market drop a little bit, a decent amount. That's what started to give back all of the gains of Friday, and then even the bonds got wrecked. But even from the morning, Powell's comments, they hurt the bonds. I even think if you look at the pre-market on S&P, we were even gapping down a little bit. Even regardless, everybody was digesting Powell, even though he said what he said on the March meeting that we just had recently, or the January one. The markets took it as negative, and the Fed futures went all over the place. And this is what I'm saying is the big story. Remember, we were talking about it on Friday. We got surprised with the strong jobs report, but it does look like we're going to get a couple of days of digestion, because what ended up happening today, we fully priced out the March rate cut odds. Remember, even on Friday, it was creeping up to like 30-40%. Well, you can see last week's probability of a rate cut in March was 45%. After the end of today, it was 15%, dropped another 5% from the low of Friday. But now the market is really believing we are not going to get a rate cut in March. Even better, you come down to May, a lot of those odds changed as well. The odds of no rate cut in May last week was 12%. After the end of today, it is now standing at 37%, ready to say, all right, maybe we're not going to get a cut in May. And even better, I was talking about this a lot here today, those Fed future plays I made from that first Fed day in December when all of that happened. Well, you could take a look at here. The odds of less than 5 or 6 cuts, they're starting to creep up. But for now, the Fed futures are still pricing a majority 5 or 6 cuts right now still in the market. So this was the main event. You did watch bonds move all over the place, but equities, they did their dance. And sure enough, after everything being up, even the chips let up. Tech was very good. You even had a lot of that follow through from last week as well too. The markets and equities still held up, and the divergence between the two is getting massive. But that's your first key of the day. It's essentially knowing what happened here today, and this is what we got to be watching out for the next couple of days. Like I'm saying, watch what happens in bonds in the Fed future. As far as what we're going to be dealing tomorrow, there's not going to be that much data. You got 2 Fed speakers. You're going to get little data here overseas, and maybe it does move stuff. We did have a lot of action in China last night leading into the morning, but we will be watching for the Fed speakers. But like I'm saying here, a lot of the work has already been done. Now that we're watching the rate cut odds finally retreat, one, we want to see when do the equities finally react, but now we want to see when does this stop. And this is what some people were talking about today following Powell's comments, depending on how hawkish or dovish these Fed speakers are. If we're already pricing in where March is not a rate cut, if things get more hawkish from here, the next level is going to be debating the May cuts. And like I just showed you, they are already starting to move in the direction compared to last week where people are considering now that, well, maybe even May is off of the table. So coming into the next few days, I think it's going to be chill. I do think earnings are going to take over, but I do think this floating idea of, okay, well, can we confirm May or not? I do think people may start bringing this up here and there. So watch out for that. And as far as the rest of the week and even moving forward, I think things are going to be a little slow. And I think the market is going to be reacting how it has been as of recently. You're going to get a little focus on macro data, people responding to the rates, then ignoring it, aka equities, and then everybody gets distracted by earnings, and then before you know it, they are punting until the next data set. I think this is going to be the theme of the movements as we move forward this week. Again, we got a little reaction to Powell, gave up some of the gains from Friday, still has us up. Any sell-off or finding a way to hold up until we watch all of these earnings companies give up. And remember, buybacks have restarted again. I think we're going to be playing this little dancing game. And then, like I said yesterday, and I would really keep this in mind, I had to bring this a lot today as we were covering a lot of the questions on stream. Don't forget, you have the CPI next week, and next week, that's going to be the final good month, seasonally speaking, of February, and then that last half of February, right after the CPI, there's still going to be more earnings, but that is usually one of the worst months in the stock market seasonality-wise. So we'll see how it all plays out, but even then this week, last week was crazy. We don't have as much. We're kind of gently working our way into it. It does depend to the extent of what these Fed speakers say, but other than that, keep an eye out for May odds. Market is getting comfortable with no March cut for now. We're going to see what the earnings bring, and then this is all preparing for the CPI next week, so I hope you're ready, but let us get into the plays. So, right off the bat, I got a couple of different plays. I did go after some post-earnings today like McDonald's. Those ended up failing. And then I did another play that I have on this list, but I'm going to start here with another earnings one. They report tomorrow after hours, and I made a play today. I decided to go a little bit earlier, and that play is going to be FTNT. Now, as a reminder, we did it today because there's still a lot of earnings. We're probably going to be going into next week as well, but if you come on the stream at 11 a.m. Pacific time, I will be going over all of these earnings previews, calculating what's priced in, and then doing the calculation for 2 standard deviations. So we did a lot today. I only wound up with 2 plays, Chegg for $7 to the upside, and then a Toyota play for tomorrow morning, but I saw 4 tonight on the list for yesterday, and I noticed how the Toyotas and even the Eli Lillys went up today, so I said, hey, they've moved a lot. They have a report. They're already pricing in 10%, but some of the options were pretty decent, so I did decide to go for a Fortinet play. This is going to be one that I will be holding for earnings, and people say, why are you going to hold? Because I spent about, $48 total to play both ways. I grabbed a February 80 call and then a February 53 put. These are just right outside of 2 standard deviations, I believe, on the call side, and then the put side, that's right there on the money of 2 standard deviations. So this is the strategy we've been playing. It's worked with Meta and a lot of other ones. It's also failed a lot too, and that's the whole point. The exposure size should make the wins pay you out, and if you lose, it shouldn't damage you that much and allow you to get a lot of exposure. So Fortinet, they've moved a lot crazy. I don't know why I was pointing at SMCI. That one's nuts, but they've moved a lot. It's related to cybersecurity. They've had some big earnings recently. I don't think their last earnings caused them to move too much. They're still pricing in 10%, so you would need a 20% move, but overall, I think they may have it in there if they're still explaining some of this recovery, anti-recovery story of last year. So that is play number 1. Watch out for Fortinet. That's an earnings. Then play number 2. This one, I don't know why it says B-Spot, but Spotify. They have earnings tomorrow morning. We went over this today. We were going to make a play, but the way I'm looking at it, Spotify has already ran up a ton. It's pricing in 10% at the money. That's 1 standard deviation. So an outsized move 10% wouldn't even be considered outsized. That would be normal based on what the market makers are pricing in. So I said, hey, if it's pricing in that much money, let's see where it's at tomorrow. Maybe it'll make those moves. If it only moves 10%, even the out of the monies, they'll still be negative on the day. I am going to look for a follow-up on this, and then we'll be able to get the data. But Spotify's moved a lot. A lot of people are expecting a lot of big things. They're nearing some of their previous highs when they were breaking into the 300s. So this 220 level all the way down to like 180 at the low, I think it is going to be very pivotal. So going to be watching out for them. That is play number 2. And then finally, play number 3. This is the one I made today. This was another small exposure play. I think I spent only about like $25 on it, but UPS, they had earnings last week. Remember, FedEx was the big one. UPS dropped, but it fell within one standard deviation, and now a lot of the contracts are expiring. It's starting to edge a little bit lower, but it's approaching that 140 level, and when you go down to their chart, I do think that is going to be a key level. This is one we even talked about as being a good long-term pickup, but this like 140 and below, you can kind of see as you get into that gap down. This is where a lot of drama really happens with UPS. So I'm looking for the upside play because we still have a put that's kind of holding up value. I went with the February 9th, a weekly, not a next week, because it'll match up with my puts that I have. I grabbed a 144 call to get us for like 20 cents. It was just there the other day, so I figured might be able to play around with it, but I do like how UPS is moving. So that is play number 3, not really related to anything else. As far as the other plays, I'd watch Toyota in the morning, and like I said, we're going to go over the earnings tomorrow. You are going to be getting Snapchat and then Eli Lilly in the morning and Spotify, but after hours, Enphase, Ford, Chipotle, Elf, Fortinet, VFC, Amgen. We are going to cover all of these on stream. We did cover all of these this morning or at 11 a.m. And then the next day, we are going to cover the Uber earnings, Alibaba, CBS, Roblo, and all of those other companies. And then you're going to finish out with PayPal, Disney, Affirm, Pinterest, Cloudflare, Pepsi, and Expedia. So we'll see how it all plays out, but I do still think a lot of earnings plays. We'll keep it small, short and sweet with the exposure, and then we find out how the market is pricing in rate cuts and where we go from here. But that is your watch list, ladies and gentlemen. Make sure you're healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, getting supplies does not mean that you are getting skills. Just because you buy something, you're not buying experience. Get in the game. Whatever you want to start, learn through experience and let the experience teach you. But Chad, I know you're already in the game. Drink that water, stay hydrated, healthy, all that good stuff. I'll see you in the morning. Have a wonderful evening and horn.